Right, so we got through some stuff last week. Let's just take a little recap, right? Right, folks, good afternoon. Welcome to the new people. Thanks for being here. Appreciate it. Appreciate you all being on time as well. I am trying to be on time. That's proven to be quite challenging these days. Anyhow, right, so pardon my setup. Let's have some people join online as well. All right, so if any day you can't make it in person, but you have internet access, you could always let me know. You all should already be. Anybody here not in the chat? You're not in the chat? Okay, let's forget that one time. Where are you all? PoA F4. I should have saved you. Let's see. Right, but Joshua, you've been in the chat, right? Valentino, I don't think I have your contact. All right, just give me 1 sec. Right. No, okay. All right. What's your contact? 787-0106. Here's Yuri. Hey, good afternoon, Yuri. How are you doing? All right, and no, just give me a number again. 742-9732. Yeah, man, Yuri, what's going on? All right, this one. All right, create contact. Valentino. Surname? Andrews. All right. Andrews. June. Cool. So right, that one there. All right. No, what was his name? Scott. June. Right. Let's add you two gentlemen to the chat. That's good. Oh, of what? Yeah. Can you see anything like last time? That, is a different one now? That wasn't me. That was a strawberry chocolate something. Yeah. Hey, Jada. Afternoon. How are you?
Afternoon, sir. I'm fine. And
All
you?
right. Good to have you on. I'm fine. Thanks for asking. Just running on. Well, not as late as usual, but we have a couple of new guys who joined today, so I just trying to add them to the chat. All right. Come into here. All right, looking right here. Yo. Okay, cool. So PoA F4. Right. Add. Noah. Scott. Add. Cool. I think that's the important part. Unless I have to drink ice cream, which you could do. Hey, where's Talia? Hey, good afternoon, Talia. How are you? Alright, good to have you on. Alright, folks. So let me just carry it. Bathroom? Okay, cool. Alright, so yes, so again, thanks to the new people who are here today. Alright, so let's just kind of go back over some of the stuff we did last week just to kind of get everybody in gear. Alright, so the handouts you have, it should have extra space to write stuff on if you need be. If you have a book, you can write any book. I tend to print out plenty of stuff, so you could get something printed out, it's not a problem, right? Okay, right, so folks, let's just get your brains in gear with the usual thing, right? So, most times when people start a business, they started with what major objective in mind? To make a what? To make a profit, right? And there's a very simple calculation for profit if you think about regular maths. SP minus CP. What's SP? Selling price, and CP is cost price. Now, when you scale it up and you sell a set of stuff, it's not so you sell like hundreds, thousands, you earn something with R, revenue. So you earn revenue, and then the CP, when you scale up costs, well, you can get more costs, or what's the E word? Expenses, and you incur expenses. So to calculate profit, you would have to match revenue earned and the expenses incurred in creating your revenue. Now, what does earn mean? So earn means, so how do we earn a revenue? We provide a what? A G or an S. A G is a good and an S is a service. So you can provide a good, which is tangible or physical in nature, or a service, which is intangible or does not have a physical nature. As the guy said, you can't drop it on your foot, right? So you have goods and you have services. Now, we earn revenue by providing a good or a service. So is the sun, well, I see the sun right in your face there. You okay with that? Or you sure? All right, cool. So you earn revenue by providing goods or services, right? This one, Zion is not a paper, it's actually my lessons class from a phone 4. I put in it here because I want to cut up pieces to put as little short videos on TikTok. So it's not a paper, sorry. It's past papers, yeah. Right, now, so we earn revenue by providing a good or a service, and we incur expenses. Like what? What are some examples of expenses? Rent, wages, salaries, sorry? Electricity, anything? Cleaning, right? So we are Wi-Fi, right? So we incur expenses by using goods or services. So you could earn revenue, bring money in by providing goods or services, but when you use goods or services, money will be going out. So you incur expenses. So to incur means to bring them into existence, right? For the time you flick on the lights, you're incurring costs for electricity, right? If you go and you're ordering food, you're incurring costs for ordering food, right? So you bring costs into existence by using goods or services, by consuming, all right? Now, what we need to do as accountants, right, is we need to be able to account for each of these things. Now, so of course, so some of you all are new, so I'll give you all the usual kind of story, right? So when we think of the word account, what comes to mind? Debit, credit, T, all that stuff. But the meaning of the word account is simpler. And a lot of times it gets lost in the fog of all these definitions, all these steps, all these T accounts and letters and journals. The word account has a very simple meaning. So I'll give the usual story, right? So CSEC basically finished on Friday with the maths paper 1. And thereafter, there's a party in Tobago called Island Crashers. So you know about it? Right. So quite a few of my students go into that. And of course, so it had a year, one of the guys went across. Parents said, all right, you can come home 2 o'clock. Who coming on 2 o'clock from a fete, really, right? Anyhow, so he's strolling the house, 8:30 in the morning, a half-empty beer bottle in the hand, one shoe's missing. We have no idea where his t-shirt is, right? He's smelling kind of funny with some interesting smells, right? And he strolled past him and he thought, like, hey, what's going on? They're like, excuse you? Come back here. So they asked him, you know what time it is? Look down at the hand. Yeah, no watch, it's done. It's time to get a watch. Funny man, sit down, right? So they say it's 8:30. You were supposed to be home at 2 o'clock. That's 6.5 hours. Account for your whereabouts. So in the context of that story, account have nothing to do with what? Debit or credit or money, right? Maybe money, we don't know, right? But the word account means to explain. At the heart of accounting, yes, you have a long definition with the whole process of recording and summarizing, classifying, blah, 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 for the purpose of making informed financial decisions. But at the heart of it is explaining. We want to explain, 1 second, let me just let in Devin here. Hey, good afternoon, Devin, how are you doing? Good to have you on. Just doing a little usual preamble here. Have some new fellows joining today. So just trying to get them accustomed to the usual thing. Right, so where was I? Right, so to account means to explain. So at the heart of it, we want to explain where the money come from and where it gone. What money? What are we doing? We started a business to make what? Profit. Now, and to make profit, you have to earn revenue by selling goods or services. Now, do goods and services magically appear for us to sell them? No. We need resources. We need things to enable us to provide our goods and services. For me, for example, to do online stuff, well, I have 3 laptops. I'm doing all 3. I have screens in class. I have furniture. I have AC. I have a printer. So I have resources. But there's a word beginning with A that we normally use in accounts to represent those resources. Assets. We need assets. We need resources to provide our goods and services, right? Do assets come for free? No. We need money to buy it. Where does the money come from? So primarily, the first port of call for money to start and run a business is the owner, right? If the owner doesn't have enough, they have to borrow. And any money borrowed is classified as a liability, right? So assets must be financed. The money to buy the assets has to come from one of 2 places. Either the owner via capital or from entities other than the owner via liabilities. So that there is the accounting equation. That's the rationale for the accounting equation. Assets must be equal to capital plus liabilities. It's not just a random formula. It has a grounding in reality. The money to buy anything inside of here came from, well, my bank account, basically, right? My or Pop paid for the construction of the room and all that other stuff, right? So technically it wasn't a liability because we did form a company and he is one of the shareholders, but we'll get into that next time, right? Anyhow, so we want to explain, we want to be able to account for the money coming in and going out, right? And when you start to make your goods and provide your goods and services, money will be coming in the form of revenue you're earning. So we have to be able to explain, because at the end of the day, we want to make profit. In order to calculate that in your income statement, you have to keep track of everything. If you don't keep track of everything, you will not have an accurate calculation of profit. And you want an accurate calculation, right? Or at least when the taxman come knocking, well, you'll figure out what's accurate then. Otherwise, you'll face penalties. All right. So with that preamble now, we have been focusing for the past couple of weeks on the literal T accounts for expenses and revenues. And we've met terms like accrual or accrued and prepaid and that sort of stuff, right? When we hear the word accrued, what comes to mind? The take back. That's an interesting accrued. Owing. Well, owing was all I was going for, but the take back. I'm trying to decide how you got there. You don't know? All right, okay. It just blows out the phrase. Okay, right. So if, for example, we incur an expense for rent, for example, for the room downstairs, I pay a rent of $3,500 a month, right? So once I occupy this room, I have to pay $3,500. If I only paid $3,000, did I pay enough? No, I would have short paid. The difference is how much? $500. So the $500 figure would be the accrued rent for that particular period, right? If on the other hand, if I paid too much, let's say for some reason instead of putting 35 on the check, I put 45, I would have paid too much, right? I would have overpaid by 1,000. That 1,000 is now referred to as a prepaid expense, right? So check this. If we have a prepaid expense, we paid too much, we overpaid, right? How do you think we classify that? And when I say classify, what I'm asking, is it an asset or a liability? What do you think? An asset. Why? All right, cool. Because you already paid for something in advance. So now, whoever you pay the money to has to give you something. Either they have to give you back your money, or they have to let you use whatever service you paid for at that point in time. So that is why it's an asset. It's a prepaid expense will result in you being owed something, some benefit in the future. And any benefit you can reasonably expect to receive in the foreseeable future is classified as an asset. All right? So assets are not just physical things that we use, not just money, but benefits we can reasonably expect to receive, right? So that's a prepaid expense. But on the other hand, if you had an accrued portion, like if I was still owing $500 for my rent, once I'm owing anybody anything, how do I classify that? A liability, right? Because now I have an obligation to provide somebody with some kind of benefit at some point in time in the foreseeable future, right? So once I have an obligation to pay somebody something or give them something, that's a liability from my perspective, right? So that's from the expenses. From the revenues now, it's actually reversed. Because if you think about it, expenses and revenues are kind of opposites. Revenues is money coming in, expenses is money going out, right? So if I provided a good or service to so lessons, right? So I did a crash course for some Form 5s. So some of them still owe me money, right? So anytime anybody owes me money, from my perspective, that's an asset. Right? From their perspective is a liability, right? So the person who is owing, from their perspective is a liability, but the person who is owed, the person who has to get the money, from their perspective it's an asset, right? So an accrued revenue is an asset, right? Whereas with the accrued expense, it was a liability because I owed it. But with the accrued revenue, it's owed to me. And a prepaid revenue is when somebody pays me in advance of me providing my good or my service. So some of y'all would have paid me fees at the start of the month. So now I have an obligation to provide you with services, right? If I don't, I have to give you back your money. Either way, I have to give you something. And you've paid in advance. So from my perspective, I have an obligation to provide you with something. So from my perspective, we classify a prepaid revenue as a liability, right? Because I owe you something, all right? So we have that. So I'll have to remember to print out the other hand, or send it to you all in the group, right? The new guys. So, because that will have all the notes, everything. So when you're doing your review, right? Okay. So how do we account for expenses in a T account, and how do we account for revenues in a T account? Right. Sorry. Let me just check my online people here. Right. So I have Devin, I have Denaya, I have Darren, Jada, Sequoia, Moon, Talia, and Yuri. Okay. All right. Lovely. So 7, 2, 4, 6, 8. So that's 15. Okay. Wow. All right. That's almost full already, boy. I'll do a second class come September. Anyhow, all right. So check this. Last week we did most of the expense accounts on this handout here, right? We took a look at some of these things and we'll go over one or two of them as an example, right? But let's talk about it from just a kind of like a format perspective, right? Because people like formats, right? I often say, don't try to memorize a format. Try to understand what goes where and why. Remember, what are we doing with an account? So account means to explain. When you're explaining something, it has to be clear, it has to be understandable, it has to be accurate, right? So we know we use the formats of T accounts. T accounts have how many sides? Two sides, a debit side and a credit side. Now, debits and credits in and of themselves are not necessarily bad or good. They represent increases or decreases depending on what it is the item is, right? Now, for an expense, right? So would you agree that an expense is something on which we spend money? Electricity, salaries, insurance, all these different things, right? What is something else on which we spend money? Something else that we buy? All right, okay. I can't argue with that one, right? But in the context of, let's say, accounts, so we have some classifications: assets, liabilities, capital, revenue, expense. So for the expenses, we spend money, right? On which of the others do we also spend money to acquire them? Assets. So assets and expenses are things on which we spend money to acquire them, right? The basic double entry rule is anything you spend money on, you debit when it increases, right? Or you debit to record the expenditure on the item. So basically, money is flowing into assets and expenses, and money flows into an account like this on the debit side, right? So it's like if you're reading, how do we read? From left to right. So money will come in, or value will come in on that side, and value will go out on the other side, all right? Okay, now check this. By that same token, if we pay an expense, so let's take it from the cash book perspective, or the cash perspective. How do we classify cash or bank? All money that we have is an asset. If we pay something, what happens to the amount of money we have? Increase or decrease? Decrease. So an asset is decreasing. To record a decrease in an asset, you have to credit the asset account. Now, that's the cash book. And every credit is a corresponding what? Debit. Every credit is a corresponding debit, right? So you debit what it is you're spending money on. Or there's a next hack. You credit where it's coming from and you debit where it's going. Credit where it's coming from, debit where it's going. What is it? The money or the value. So if the money is coming from bank and going to pay expenses, you credit cash or bank because it's coming from there, and you debit the expense because it's going to be paid there. So on the debit side here now, you're going to see cash or bank. Or you can see cash book if you want. Some people put, if it was rent, they'll put rent paid here. I don't advocate that because in a T account, the thing you put here is supposed to be the name of the other account affected by the transaction. All right? And there's no rent paid account and that kind of stuff. Actually, there could be, but different story. So the amount paid goes on the debit side. Right? Now, we talked about expenses being incurred, right? We only need to pay expenses if we incur them, right? So if you're paying on this side, on what side do you think the amount incurred will go on? The next side, right? Now, we call that figure, the amount incurred, the income statement figure. Right? Now, another way that some people like to think about this is from a liability perspective, right? So once I incur an expense, I now have something I have to pay. And when it's something you have to pay that you haven't yet paid, you're owing it, technically speaking, right? And once you're owing something, that's a liability. And liabilities have recorded via credits, right? So this is the credit here to record the amount incurred, the amount you were supposed to pay, right? Now, any expense account will always have at least this item here. Most times it'll always also have a payment figure, right? But what about the balances? That's the interesting part here, all right? What's going on with these balances? So let's talk about an accrued balance. So if you have an accrued expense, that's an amount left unpaid and owing. And anytime you owe anybody money, that's classified as a liability. And do you know what side of the account the balance will be brought down for liability? Debit or credit? Or just by the way, if the answer is no, it's perfectly fine. I don't get vexed or make you feel bad, right? So if the answer no, so credit, right? So right. So if you have, so this would be the accrued balance brought down, right? Now, if at the end of a period you still have an accrual existing in the expense account, it'll actually be carried down from this side, and I'll tell you why. Because again, it's going to be brought down on the credit side because liabilities have credit balances at start. Right? So accrued balance brought down. Right. Now, what about the other one? What about a prepaid balance? So a prepaid expense is classified as an asset. Assets have debit balances at start. Oops. And at the end of a period, if there's a prepaid balance, it'll initially be carried down from the credit side and then brought down on the debit side. Right? Right. Now, before I go any further, just to remind you all, right? So the usual format we follow here when dealing with accrued and prepaid expenses or revenues is the old British format, right? Now, expense accounts and revenue accounts are also known as nominal accounts. You've ever heard that phrase before, nominal? Okay. A nominal account is also called a temporary account. It only exists for a particular period of time. And most times, if not all, revenue accounts and expense accounts are nominal because they only exist for a year, right? And at the end of that year, they'll be closed off to the income statement because why? We want to calculate profit. So this item here is actually supposed to, is what we call a closing entry. And a closing entry usually removes all balances from an account, right? If there's something left over, right, like here, a prepaid or accrued balance, we can show it. But again, as the old British version, which most of us still use because we are descended from the British and the textbooks use that same thing. I have been told by a reliable source, my old teacher, that not for you all per se, but CSEC is moving to the more American version where they will actually transfer all balances out of an expense account and actually have an account called an accrued expense account. So when I was doing it, told us that's a big no-no, right? But when I went to UE, the textbooks, they use the American style of bookkeeping, and that's what they did. They had an actual account marked prepaid expense or prepaid revenue or accrued expense, all that stuff. And what it did was it actually closed off the expense account. It removed everything. There was no money left in the account. It was close to zero, which technically is what's supposed to happen, right? So if any of you all in school doing that, let me know. So I'll have to kind of modify my notes and my questions as well. All right. Okay, so that's the expense account, right? Now, like I said, last week we did the expense for January 18, Jan 2016, Jan 2015, 2010. 09 had two. There was an extra one we didn't do, so we'll do that one just now. And then 08, 1, 2, 8, there were two here again, right? So what I want to do is I want to start you all off with one of these expense accounts here, just going through it. And then I'll give you all one to try. There are only, like I said, 2 or 3 left. Yeah. All right, cool. Okay, let's put that down here. Where's the thing? Right, so 9. Okay, put that on top there. Close that off. No! All right, so folks, in your handout here, see if you can turn to the page that has Parkinson on top. Is kind of in the middle of the hand. So if you find the midpoint, the 10th page, well, yeah, page 10. It should say B. Parkinson. I think you had to go forward. I think you had to go the next way. Well, let's look for Parkinson on the top. Do you have that page? Right, so this is page 10. What I'm saying is just, okay, so turn 1, 2, 3, 4. Turn 4 pages. And turn one more. Isn't it? No, go again. Go again. Yep, that's it. Yeah, okay, so it's a landscape page. Right. Okay, cool. All right, so we did. And so what I'll do is I'll I'll do over a couple of the accounts here. All right, so those of you who were here last week, of course, you don't have to do it over. Those of you who weren't, you could copy stuff down if you want. All right, we'll figure it out. Right, so again, I wouldn't spend too much longer on the expense accounts because we did most of them last week. So we'll just do it as a bit of a warm-up, then switch to revenue accounts by 5. All right, and just to tell everybody who is in person and online, we do not have class on Wednesday. My Form 5s have their last exam on Friday, so they ask for all the attention, right? So next week we'll have class as per usual. So hold on. Next week, right? So I know some of you all have exams starting from Monday, right? So what I'll try to do is I can't promise to do a makeup session this weekend because this weekend I might have more CAPE accounting, or I might have the Fatima boys come in to do maths because their maths exam is Monday. So and for those of you who have not yet sent me a timetable for exams, please send it to me so I know who has what exam when, including my online people. I think some of you all might have sent it already, but please feel free to send it again. Right? Yeah.
The timetable you got for us, it's not confirmed that it's our actual timetable, by the way. We're probably gonna get our Sunday night, like we did last time.
All right. Well.
Our exams start Monday.
Yeah, we will see what's going on. Right. Yeah. So. Oh, thank you. Yeah. So we'll put extra sessions on whenever convenient, because, like I said, once my Form 5s go, I have a lot of space, right? So we could fix that up. We could even work weekends if you're available and want to come, right? But we don't have to. It's just an invitation, right? Okay, so let's take a look here. So this question was the first question we encountered last week when they didn't use January 1st and December 31st as the start of the year and end of the year, respectively. They used March 1st at the start of the year and February 28th as the end of the year. So that's just something to be mindful of. Not every question will have a December 31st year end, right? The more recent papers tend to stick to that, but you never know what they could bring and how they could bring it, all right? Okay, so we're looking for wages specifically, right? So in this particular item here, what does this say here? This says accrued wages, 2030. So an accrued expense is classified as a liability, and liabilities have balances brought down on the credit side. So you're going to go on the credit side, you're going to put, now you could put just plain old balance brought down if you want, or you can put accrued balance brought down. Right? So this would be 2030. Right. Now, at the end of the year, it's still accrued, right? Now, what I'll do is I will print out this stuff here for you all as a format to use. I think I had a couple extra some, but I think I put them in the pile. All right? So the closing accrued balance, again, will be brought down on the credit side, right? But before you can be brought down on the credit side, after you close the account, you have to be carried on from the opposite side. So if you're going to be brought down on the credit side, you have to be carried on from the debit side. Right, and that closing balance for accrued wages is 1990. All right, cool. Now, what are we missing? Do we have any other information here? I've seen wages paid by check. Right, so that is the payment figure. So again, if you refer to your format, right, the payment figure will go on the debit side. Because again, credit where it's coming from, debit where it's going. So money is coming from bank because it says check and it's going to pay wages. So your credit where it's coming from, bank, and your debit where it's going, which is wages. So on the debit side of the wages account, you'll put how much? 12,530. And where did the money come from? It came from bank, right? And once again, just to tell you, because I know sometimes people have trouble with this entry here is not a debit to bank, right? Over the years, even on some of my YouTube videos, comments come, sir, but you debited bank here. Like, no. This is not a debit to bank. This is an entry on the debit side of the wages account. And it says bank. Why does it say bank? Because that is the other account affected by the transaction. That's where the money came from. That's where this 12,530 came from. It came from the bank. All right? Okay, sorry. Sorry. Okay, so what are we missing? Oh, sorry, I forgot to put dates. So this one should have been the 01 March. This should have been 28-Feb. Hey, give yourself. This will also be 28-Feb. Right. And right, so the only figure missing is the income statement figure. How much do we actually have to pay? Because it's a little confused because we had some owing at the start, we paid some, and we were still owing some at the end. So how much were we supposed to pay? And that's the question. Remember, what we do in an account? To account means to explain. So we're trying to explain, hey, how much do we actually have to pay? All right? So what we will do is we will balance off the account. How do we do that? Okay, so on this side, we're going to add up these two figures here. When you add up those two, you get 14,520. And that figure has to be matched on this side as well. So how do we get it to say 14,520 here? Well, we have to add something to 2,030 because 2,030 is most certainly not equal to 14,520. It's less. So what do? Well, we subtract. Yeah, correct. 14,520 minus 2030. And that there is the, give yourself, the income statement figure, right? Or the amount incurred over the year for wages. And if we add this together now, we will get 14,520. And if you feel so inclined, you could bring your accrued balance down just to kind of completely look. Right? Some teachers say, don't do it. Whatever your teacher wants, just give to them. Right? But just know that you can be asked in the exam by the question to show the balance brought down at the end of the period or at the start of the next period. Right? So this would say, I guess we could put 0, 1, 2009, right? So this one is optional, all right? Okay, so what I would invite you to do, if you want, is you could copy it down or I could print it for you, right? Actually, let me do a second one. So when I do the second one, I'll print it for everybody who wants it, right? All right, the next account here is the insurance expense account. Okay, cool. So for insurance, let's find the information. So the March 1st stuff is the opening balances, right? What does it say for insurance? It says prepaid. So insurance is an expense, and a prepaid expense is classified as a what? Asset. And assets have debit balances at start. So prepaid balance brought down 450, right? And then down here, we see in the closing balance, it also says prepaid. Okay, so we're still prepaid at end. So a prepaid expense balance will be brought down on the debit side. But before you can be brought down on the debit side, you have to be carried down from the credit side. And that was how much? 310? Okay. Now, what other information do we have in the question in terms of insurance? Insurance paid by check. So the payment figure for an expense will always go on this side. Let's say bank, 1420. And what are we missing? We are missing the income statement figure, the amount incurred. All right. So how do we find that? Well, we could balance off the account. We add up the two items here. We're going to get 1870, which has to be reflected here as well. Clearly, we need to add something to 310 to get 1870. I guess in 1560, let's check it out. To find out, we take the total here and subtract the item on that side and get 1560. And when you add up now, 1870. And again, you could bring your balance down on this side here. All right, okay, cool. So this is May 09. Oh, it's already printed, cool. Does anybody not want a copy? Does everybody want one? Oh, you take a picture? Okay, cool. So 1, 2, 3, 4, 5, 6. I lost count. 2, 4, 6, 8. So 7 copies, right? Right, because you were here last week. Okay, cool, cool. Yeah. Okay, so just the new people then. Okay, cool. All right, cool. Okay, so, all right, so in class people, are we okay with the two accounts as they stand so far? Any questions, anybody, anything? No? All right. Online people, I know we did it last week, but let's give them a quick Genie chat if you're good with that. So if you're good with that, give me a Genie chat. If you need me to re-explain anything, please let me know. Not a problem. Right, so, sorry. All right, cool. Yo. How come it says? All right, because what happened in the question was that the start of their financial year was 1st of March 2008, and the end was 12 months later, February 28, 09. So a financial year doesn't always correspond to a calendar year. It could start January 1st, or it could start June 1st, or any 1st, March 1st, September 1st. So that's why. What's that? That's correct. Okay, right. So with that now, we have an advertising expense account to do. So what I'll do is I'll maximize this one. I'll zoom in a little bit more. All right, so let me get the printouts for you all. let's take a look at the question. And we want to do the advertising expense account. Okay. So for advertising, no, is it advertising? Yeah, advertising. No, commission is a revenue. So what we want to do is the advertising one. So let's identify all the advertising information, shall we? Right. So in the list of opening balances here, right? What do we have for advertising? Prepaid. So at start, the advertising expense is prepaid. How do we classify a prepaid expense? Asset. So on what side of the account would the balance? Debit side. Good. But if you look at the closing balance information, what does it tell us about advertising? Owing at end. Now that's interesting. So we started off prepaid, but we ended up owing. Now what that's going to do is it's going to change the side that the balance is carried down from. Right? So before we had accrued at start at end. Then we had prepaid at start at end. Now we're going to have prepaid at start and accrued at end. So they will end up on the same side. All right. Sorry, hold on. I was to print out something else for you. I was to print out the format here. But I wanted to do both the expense and revenue accounts. Okay. So just be careful with that. All right. So try this one for me. So try. Oh yeah, and of course we have advertising paid by check. So that side doesn't change in terms of the expense account. That's always going to be on the debit side. All right, so plug in some stuff here for me. I think all three of these items are going to be on the debit side. And the sole item on the credit side will be the income statement figure. All right, so try it for me, right? So on the same hand, what you have there, you have some space for the T accounts. Right. So you can draw it up there, you can draw it up in your book, wherever you're comfortable. Right? And of course, if you have any questions, if you're having trouble, it's not a problem. Let me know. All right? I'll just take a quick peep inside how the maths class going, and I'll come back and check all that, right? Have a pen? Oh, yeah, pencil.
All I don't have all my pencils. Every single time I land on a pencil, I'm no irritation. I think you do. Where's the height on a passport? Where's the height on a passport? Like it, I'm not. I'm trying to figure out where height is on a passport. There is no height on a passport. There is no height on a passport. It's an ID. So I'm not going to see it. No, we just don't. Okay. Yeah, we were at international. But it always takes long.
You don't want to print out?
Me?
The advertising.
I was right. Oh my god.
Okay. Yo. That's the insurance. Somebody with it. Some Nyla asked to see it. Yeah. Right. So let's talk through a couple of things. Right. So we're dealing with the advertising expense account, right? Okay. So in the opening balances here, what does it tell us about advertising at start? Prepaid, accrued, neither. Prepaid. So that's this item right here. So on what side of the T account does the prepaid balance at start go? The debit side, because prepaid expenses are assets. Assets have debit balances, right? So you can put that on your debit side. Put accrued balance brought down, 110. All right. Okay. Now let's go up to the payment section here. So do we have any amounts paid in respect of advertising? By check, right? How much is that? All right. On what side of the expense account do we put the payment figure? Debit side. On the cash book or bank account, you'll credit the bank account because money's coming from there and you debit where it's going. And it's going to pay the advertising expense account. So you credit where it's coming from, bank, and you debit where it's going, advertising. Right? So on the debit side of your advertising account, you're going to put bank and then put how much? 450. You are paying for it, yeah? It's coming out of the bank account. That's correct. So remember, there are two sides to every transaction. So what are we paying for? We're paying for advertising. How are we paying for it? With a check. So check means that bank is affected. So if we are paying for something, is money coming out of or going into our bank account? Out of. So bank is an asset. If money is coming out, bank is decreasing. To record a decrease in an asset, you have to credit the assets account. So you're crediting bank because money is coming out of there. And well, every credit needs a corresponding debit. And what are we paying for? We're paying for advertising. So you debit whatever it is you're paying for. So you credit where the money is coming from, you credit bank, and you debit where it's going. Advertising. I don't understand. This is so weird. Yeah, Talia, talk to me. What's up? Oh, sorry. Oh, timetable. Okay, right. So your mass is the 17th, okay. And then your accounts is the Tuesday, okay, right. So we have a couple days. And then Wednesday's a holiday. All right. Oh, and you have multiple choice too. Okay, so what I could do to Leah is I could help you for the maths on the accounts, yeah? I could send you some replays for multiple choice that you could watch. Actually, going live later on my phone 5 class. Jan 2024 today. All right, cool, no props. All right, so, and the last thing we have is in the closing balance section, right? So what does it say about the advertising at the end? Is it prepaid, accrued? What does it say? Owing. And what does owing mean? Accrued or prepaid? Accrued. Now, an accrued expense is a current liability, and liabilities have balances brought down on the credit side. But before it can be brought on the credit side, you have to be carried down from the debit side. So on the same debit side where you have both the opening and balance and the bank figure, you're going to put accrued balance carried down. So put it on that side too. Did you finish his question? You finish your question? Oh, okay. Okay. Oh, yes. Okay. All right. Sorry. I'm going to see what my wife's saying here real quick. And we'll correct this account and switch. Oh, right. Tuesday 11th. Hold on. Is that form 4? Okay, right. You could. So Leon is the. Oh, hey Jada. Oh, so you have some time until your PoA, and your maths is after as well. Okay, interesting. All right, we could try and do some work for both of those if you want, or just the PoA. All right, and I see econ is the Thursday too. All right, we'll see what we could do. Okay, cool. Thank you. All right, no worries. All right. So let's see. So right. So now we have 3 items on the debit side, right? What is missing from the credit side? The credit side of an expense account must have an income statement figure. All right. So normally we would have added up stuff on the debit side. There would have been something on the credit side. We subtract. Is there anything on the credit side? So technically you have a 0. So what we have to do to find the income statement figure is simply add up everything on the debit side. So add it up. All right. I'm gonna start populating my advertising account. Right, so the opening balance was prepaid. So maybe, yeah. Prepaid balance brought down. Okay, that is how much? 110. What, sorry? That would be at start, so that's the first how much. Right? The bank figure came in 450, right? So we could assume that's year end, right? 28-February. That's bang, that's 450. And then we, at the end, we have advertising owing. Right? So that's accrued balance carried down. That's how much? 70. Right, so when you add that up, you get, yeah, 630. On this side, the income statement figure will simply be the balancing figure. We add it up now, we get 630. Right. Yeah, and you could bring your balance on if you want, so accrued balance brought down. Right. So, as we could see, with the wages expense, we started off accrued and we stayed accrued at end. With the insurance expense, we started off prepaid and we stayed prepaid at end. But it is possible to start off with one type and switch to the next type at end. Right? It is quite possible to do so. Right? And the reverse could happen. You could start off accrued and end up prepaid at end. All right? Okay. So quick question. In class, people, are we okay with the advertising account as it appears on the screen? Any questions, anybody, anything? No? All right, Google me, just give me a quick Genie chat if you're good with that. If you're not, and you need to re-explain, give me an R and let me know how to help you explanation-wise, right? Let me know what you need me to do. Yeah. All right, cool. So what we're going to do now is we're going to switch gears a little bit. So that was a bit of a warm up for the expense accounts, and we did most of those already last week, right? Now, of course, there are more questions on the paper where we could have expense accounts to do, but today I wanted to focus on the revenue accounts, right? So we dealt with the expense accounts just now. So let's go back to this piece here. So when we finish with the revenue accounts, I'll print it out for whoever needs one, or send a picture in the chat or whatever. So there actually should be a picture in the chat from last week, but I'll send it again if anything. All right. Okay. So right. So with revenues now, basically the revenue account is the flip, the horizontal flip of the expense account. Well, let's explain why. Right. So I had to start with the figure of money. Money coming. Which way? If we have a revenue, if we're earning a revenue, is money coming in or going out? Money coming in. So let's talk about the bank account. If money is coming into bank, is bank increasing or decreasing? Increasing. How do we classify bank? Asset. So, Paige, if an asset increases, what do we do? Debit or credit? D. Right. So that should to help you or to aid you in remembering, just remember aid. AID. Assets increase with you could remember that too. AID, assets increase with debits. AID. So if your asset of bank is increasing with a debit, right? Every debit needs a corresponding what? Credit. So if we're earning revenue, money's coming from revenue. And what's it kind of hack? Your credit where it's coming from and your debit where it's going. So money's coming from revenue account, rent revenue, commission revenue, whatever, and going to bank. So your credit where it's coming from and your debit where it's going. So whatever money come from there, it's going to bank or cash, or the cash book. Right. So this is the receipt, the amount of money coming in. Right. Now, just like the expense account has an income statement figure for expenditure incurred, how much was supposed to be paid. The revenue account has a figure for revenue earned, how much we were supposed to receive. That will go on the debit side here. Now again, you could think of it almost like a debtor or receivable. So when you earn your money, somebody owes you that money right away, right? And as an asset, once somebody owes you money, that's an asset. And assets have what kind of balances? Debit, right? So technically speaking, you could consider this like a receivable, right? So that's how much you were supposed to. What it actually is showing is a transfer out of this account. It's transferring this to the income statement. All right. Okay. Now, let's talk about the accrued revenue. So accrued revenue means that somebody didn't pay you as much as they were supposed to. Right. So Shamo, how would you classify that? An accrued revenue? Well, how would you classify as an asset or liability? That's my question. So if somebody owes you money, that's your liability. Yeah. As you, from your perspective, it's an asset. So an accrued revenue is an asset. And what type of balance does an asset have at start? Debit or credit? Debit. So the opening, sorry. So the accrued balance brought down will go on this side. And of course, if the opening accrual is on the debit side, the closing accrual will be on the credit side. Because after you carry it down from this side, it's going to be brought down again here. Accrued. Sorry. Now, what about the prepaid item? A prepaid revenue is when somebody pays you in advance before you provide a good or a service. So you didn't earn the money yet, which means you now kind of owe them money because they gave you money without you having done something for it. So either now you have to do something, which is provide a good or a service, or give them the money back. Either way you take it, you owe somebody something. And once you owe somebody something, how do we classify that? Liability. And liabilities have credit balances at start. So prepaid balance brought down. Yeah. I mean. Mm-hmm. Mm-hmm. Right. The sequence doesn't actually matter, to be honest. Once you have the correct item on the correct side, that's the more important thing. Right. So now, when you have if the opening prepaid revenue goes on the credit side, the closing prepaid revenue goes on the debit side. So prepaid balance carried down, and then of course it'll be brought down. So prepaid live will end. Why will the live end? I don't understand. Please try again. Right. Okay. Cool. Sorry. One sec. Why will it end? I'm here. Hey, Yexi, how you doing? Detected inactivity. Rubbish. Go away. Right, sorry. Right, so prepaid balance carried down. Brought down. It's a brought down. Right, okay, cool. Okay, so what I'm going to do is I'm going to actually put this in. So oh, there you go, cool. All right, does anybody not want a copy of the formats? All right, no worries. We'll do that. All right, and what I'll do is I'll send this in the chat as well for those who are online. All right, so online people, you'll have a picture in the chat there. Let me just give you the format here. Right, so we're going to go through from the front of the handout, actually, as many revenue accounts as we can. I'll do the first couple as examples for you all to walk through, and then give you all a few to try on your own. Right, so you have your formats, you can refer to that. But again, I mean, if you want to try and learn them up, that's fine, but it's better to kind of learn what goes on what side and why, to understand as opposed to memorize. Understanding facilitates memorization or remembering. Oh, I'm going to check out on TikTok. Hey, Peter, Kugisaki Nobara. All right, cool. Yo. Okay, so the stuff below is for the start of a next period, right? So that would actually technically be represented by the carried down version of it. Of that period, yeah.
The end of that period. To start this new period.
Yeah, that's correct. All right. Okay, cool. Let's take a look and see what's going on here. Okay, so let's go back to the handout. So we're going to go back on the front, right? Let's maximize this. We're going to go back to the front of the handout, and we're going to start with the 2018 question, right? So let's zoom out a little bit. Actually, we could zoom back in. Right, so the following is a summary of Sweet Serve's bank account, right? So in your handout, just turn back to the first page and open, right? Turn back to the front and open. This is the first item, right? So the following is a summary of Sweet Serve's bank account for the year ended 31st December 2017. Right, so you have a bank account. So, right, so bank, as we know, is an asset. Assets, what are your double entry rules, Paige? Okay, that's not the rules. that's your tool to remember the rules. Okay, let me.
Assets increase.
Right, so the increases in assets go on the debit side, and the decreases in assets go on the credit side.
Yeah.
All right, cool. Right, so bank account is an asset. The opening balance, as you can see, is on the debit side. On the debit side, we also have money coming in, right? Inflows or receipts, right? So sales, that's when you sell your goods or your services. So money will come in from sales on the debit side of the bank account. Rent received. So received means money is coming in to the bank account. So those two things will increase the amount of money I have. Hence, they go on the debit side of the bank account. And in each of these, in sales and rent received, right, the corresponding entries here will be on the credit side. All right. So these debits here have corresponding credits on that side. Oh, sorry. Let me just answer Tristan here. Tell Tristan that Kerry. Right, now, by the same token, on this side here, you have 4 items, right, that are outflows. Purchases. Isn't that when you buy or pay for goods? Right, so that's an outflow. Insurance, that's payment of an expense. Sundry expenses, payment of an expense, money coming out. Drawings, anybody remember what drawings is? When the owner takes anything for his or her own personal use. So in this case, the owner's taking 15,000 out of the bank. Right? Maybe they went to buy a new iPhone or something. Me, I know. 15 Pro Max. Right? Anyhow. So, at the end of the day, so you started off with 20,000, right? Here, you had 244 coming in, and you had, what is that, boy? That's 225, 240 going out. So you're left with 24,000, which of course is now brought down on the opposite side here. All right? Okay. Now, check this. So your bank account tells you about money coming in and money going out with respect to specific items, right? Now, it says here, the following additional information is also available. Now, check this. This date here, 31/12/2016. So that's the 31st of December 2016, right? And this one here is 31/12/2017. So that's 31st of December 2017. So those are 1 year apart. And if you go back to your top, what does it say here? Right? For the year ended 31st December 2017. So the year that we are concerned with starts Jan 1st, 2017, ends on December 31st, 2017. So you might be wondering, why therefore are they giving us balances that exist at the end of 2016? Because the balance at the end of 2016 becomes the balance at the start of 2017. So these balances here, the 2,000 and the 1,500, are actually the opening balances of 2017, right? So the closing balance from 1 year becomes the starting or opening balance for the next year. Okay, so now we focus in on the rent revenue. All right, so what does it tell us here? Rent revenue what? Outstanding. Outstanding. Is that accrued or prepaid? Accrued. And it's a revenue, right? So if somebody, so that means that somebody owes you money. Once somebody owes you money, how do you classify that? Asset or liability? Asset. And assets are what kind of balance start? Debit side. So this 2,000 will be brought down on the debit side. This one, so it still says rent revenue outstanding, so it implies that the accrued item stayed accrued at the end as well. So this item here will be carried down from the credit side. And now, if you look up in the bank account, because that's what they like to do, they like to give you the payment figure on top and the balances below. Right? Do we have any information in the bank account related to rent revenue? Rent received. How much did we get? 24,000. So what we want to do is we want to compile all of the information about rent revenue inside the account. Let's see how we're going to do that. Right, so rent revenue. Okay, cool. So again, the opening balance. Right. Oh, you need directions? You'll know how to get here? Or the outside? Okay. What's that? By now? Let's see. Right, so the opening balance goes on what side? On the debit side. So we're going to put, oh crap, hold on, sorry. 01 Jan. This is 2017. Right, so accrued balance brought down is 2,000. Right. Now, we also have an accrued balance at end. So if at the start, the accrued balance is brought down on the debit side, at the end, if it's still accrued, it's going to be carried on from the credit side. Oop. Right, so 31 dash December. On to you. Right, cool. Right, so the accrued. Come on, man, Philip, give yourself. Carry down. That's how much was the closing balance for the rent revenue? 1,000. Right, so that'll be brought down here. But before we get there, what else do we have in respect of rent revenue? We have rent received, which is 24. So check it. If it's on the debit side in the bank account, in the rent account, it's going to be on what side? The credit side. Because every debit needs a corresponding credit. What's that? Sorry. Okay. Right. So 24,000 goes here. This will say bank. And this will say, well, we'll assume it's the 31st of December. Or by year end, we paid that much. All right. Hey, how you guys doing? Right. What did I tell you? Oh, that's counting delivery? All right. Okay. Right. So check it. We've put in the three pieces of information at our present, right? What are we missing? We're missing the income statement figure. All right. Now, how do you propose we find this figure that's missing here? The balance of the account, right? On the credit side, we have two items. When you add them together, we total to 25. That total must be present here too. But clearly, we need to add something to 2,000 to get that. And that will be the income statement figure. Right? So you find the difference. You take 25,000 and you minus whatever's on this side here. We get 23. And when we add it together, we get back 25. Yeah, you can even it for me. All right. Okay, so you all should have actually some space, some lines down here that say rent revenue account. So what I want you all to do is I want you all to copy it down for me, right? Right, so drop your little T account in that space there, wherever you want to draw it up. Right, so just to recap, right? We had rent revenue outstanding at the start and at end, right? So rent revenue is a revenue. So if you have an accrued balance or outstanding balance or revenue at start, that goes on the debit side because accrued revenue is an asset and assets have debit balances. At the end, it'll be carried down from the credit side and brought down on the debit side. All right, so that's the 1,000, right? So the opening balance was 2,000, closing balance was 1,000. Now, the only other piece of information we had in respect of rent was the amount received, 24,000. So that's on the debit side in the bank account. And every debit is a corresponding credit. And you'll credit the account it came from, which is the rent revenue account. Sorry. Right, so we had those three items. We didn't have this item here. So, of course, now to find the missing figure, which is the income statement figure, we have to simply take the 25 minus the 2 and label that income statement because that's exactly what we're missing. All right? Because that's what the question wants us to find too. Now, they didn't ask you specifically to find that, but they kind of expect you to know that, hey, I have an opening balance, I have a cash book figure, and I find the income statement figure. What, that's mine there? That's mine? Okay, cool. Oh, that's pretty cool. Sorry, what? What was that? All right. In class people, anybody have any questions on your rent account there? You okay with it? With this item here? All right. So in the all right, hold on, let's now. Right. So in the bank account, we had money coming in. When money goes into bank, bank increases. Bank is an asset. To record an increase in an asset, you have to debit the asset account. So on the debit side of bank, you'll see 24,000, and you have to put where it came from. Came from rent received, which is rent revenue. Right. All right. Cool. In the other account. Yeah, that's correct. Because every transaction has two sides, a debit and a credit. So if in one account you have the debit entry for that particular transaction, in the other account you'll have the credit entry, or vice versa. So that way, if you know, for example, the two accounts affected, and you know which one you're debiting, you kind of automatically know, hey, well, the next one has to be credited, or vice versa. All right? Yeah. Yeah, well, each account has two sides, a debit side and a credit side. So if something goes on, if it doesn't go on one side, it has to go on the next side. Right? And again, try to understand the rules, right? It takes a little time because again, these things aren't really intuitive, right? This double entry system was made up a few hundred years ago. It hasn't really been changed or modified much since then, right? The double entry itself. We've added some more items, we've complicated some things, but at the core, it still basically is what it used to be back in the 16th century? Somewhere so. Yeah, so 500 years ago, or 17th. I was never remember if it's the 16th century or 1600s. Oh, okay, cool. Thanks, guys. All right. Okay, Google Meet. If you guys are good with that rent revenue account, just kindly give me a G in the chat. If you need me to re-explain anything, please give me an R. Okay, great. Thank you. All right, that's 5 out of 7. So the next two, let me know whenever you feel so inclined. All right. Okay, let's go on to the next question. Right, so we just at about half past. So I think we get through about 3 or 4 more revenue accounts. Yeah. Oh gosh. All right. No problem. That's fine.
Yeah, so it's just everything breakdown because you know it's literally with the washing machine and dryer.
Yeah, no,
The washing
we have.
machine breaks,
Yeah.
and someone came to fix it,
And
then the dryer breaks.
I sometimes just had to actually open top of the dryer and spin the barrel.
Yeah, so literally like, we have to go down to the east tomorrow by my uncle to go into the laundry.
Yeah, for sure.
Yeah, boy. Okay, so
All
tomorrow,
right.
same thing?
Tomorrow, I don't think Kirk has a class tomorrow because the last 2 Tuesdays nobody came. Yeah, he has a few people from multiple choice from 12 to 3. Yeah, the people who came earlier. It's only 3 of them.
Okay,
So
just book a message.
yeah. So if not tomorrow, Wednesday for sure.
Okay.
All right, cool. Later.
Bye guys. Bye. Yes, it's inside.
Oh wow.
Oh my
Yeah.
goodness. Okay, so one of the boys inside is still using it. He's wants it in the middle. He has it. Do you need it now? Okay,
Yeah.
so he'll be in that classroom.
Who's that? That's Jordani.
The one that came with the cousin.
Janice here. Okay, that's cool. I could organize that for him. That's no problem.
Hey guys.
All right, later.
Sorry, if I look like I was trying to steal it.
All right. Okay, so you're turning the page. It'll say page 18 at top and then page 19, right? This is from Jan 2016, right? Right, so we're looking at Gaga Mel. Yeah. So it starts off by saying Gaga Mel Company was owed $2,500 in commission revenue on the 1st of Jan 2015. Okay, cool. So if somebody owes Gaga Mel, how would Gaga Mel classify that asset? And what type of a balance does assets have at start? Debit side. So this item here, this commission revenue would be accrued, right? Well, you could just put balance brought down on the debit side right here. And then during the year, an amount of $14,000 was received and deposited into the company's bank account in respect of, I'm assuming, commission, right? So if you put money in the bank account, do you debit or credit the bank account? Debit. You'll debit bank. And you'll do what to the other account where the money came from? Credit it. So on the credit side here, you'll put bank and you'll put 14,000. All right. And then, interestingly, it says here, at the end of the year, there were no amounts outstanding, accrued, or received in advance. So at the end of the year, there was no balance carried on. So all you have to do is just put the items on the side, and the figure that's missing is the income statement figure. which we know will go on the debit side. Because if you look at your format that I gave you, you'll see the income statement figure for revenue accounts will go on the credit side. Sorry, the debit side, my bad. Okay, so plug in the opening balance on the debit side, the receipt on the credit side, and then balance it off to find the the income statement figure. Okay. Let me just peep and see if I can get that calculator back. Sorry, I was going to carry this upstairs.
No, give Maranado.
Michigan? Then you just give that.
That's that is Cassie. Mishka is the one I just wrote.
Michigan. You go Michigan.
You still on Cassie? Check. That's a big jump. Everybody had an idea. I just don't mean anything.
I'm not, I can't.
No, those are just so you know.
I did, but he wanted to hold me back.
He's getting all the way.
So, it's not nice. It's 17. Oh, speaking. Yes, he just the jumbo, never.
You have 40.
Exactly.
Cancels out.
It cancels out. Now we don't have to pay Chris. Yeah, now we don't have to pay Chris. We don't have to pay him. Right?
Jada paid him before. So you're the he paid him.
And everybody, the rest of the
See that red SUV outside, that's it. Right, sure which one. This is this. But we have some time again. Alright, cool. Sorry, yeah. No, this
I see that.
okay. So let's take a look. So for the commission, so for this particular account here, right? So Gargamel was owed 2,500 in commission revenue on the 1st of January. So again, if somebody owes us money, that's an asset. Assets have debit balances. So you'll put hold on, what do you get? So 2015. Right. So then we have 01-Jan. So we can put accrued balance brought down is 2,500. Right. And then during the year, an amount of 14,000 was deposited, received and deposited into the account. Okay. So your debit bank and your credit where it came from. It came from commission revenue. It's 14,000. That is the bank figure. 31-December. Cool. And all that's missing is the income statement figure because they told us that there's no balance carried on at end. There's no accrued or prepaid balance at end. So all we have to do to balance it off is find the difference between this total and, well, the other total. 11.5. All right, so that's what the account looks like there. All right, Google Meet, if you guys are good with that, just kind of give me a G in the chat. If you need me to re-explain anything, let me know. Give me an R. All right, thank you. So let's see in Devin and Yuri, I think. Okay, all right, guys. So hopefully you guys are understanding. Let me know. All right, in class, people, are we okay with that? Marcus, we okay with that? All right, Jaden, yeah, cool. No, are we cool? All right, talk to my Valentino. We okay with that one? All right, Jushan and Shamo, we okay there? All right, Peter and Nyla? Yeah? Okay, cool. All right, so I'll leave it there for a minute or two if you're copying some stuff down, but we want to go to the next question, which is the Jan 2015. I'll put it up on the screen just now. All right, and again, if anybody has questions they don't want to ask in class, you can always WhatsApp me after. Question? Oh, the question? Okay, no problem, sorry. Hey, I had to put that to print. Alright, let me just actually check something real quick from my maths class. M. Chong Sing, boy. Hello, M. Chong Sing. How you doing? And disappeared. Yo. Bring it down? But there's no balance at the end. That's what they said. You see, at the end of the year, there were no amounts outstanding or received in advance. Alright. Right. Okay, I'll have to message them next time because I want to move on quick. See if we get 2 or 3 more of these done. Okay, so you turn on the page to the next one where it says Queller True Life. So Queller True Life, an insurance agency, earns commissions on policies sold. The firm operates from a building which it rents from citizens realtors. Okay, Queller True Life's accountant Mary Jane reports the following information for the period ended 31st December 2014. Right, so we have commissions received and paid into bank, 351,600. Wow, okay. And then we have commissions to be collected. So to be collected implies what? That we have not yet collected them, which means they're still owing to us. So this is a closing accrued balance. And on top of that, look what they put here: commissions received in advance. So this is a very peculiar question because we have both types of balances at end. We have an accrued balance at end and a prepaid balance at end, right? So if you refer to your format, what's going to happen here, right, is that you're going to have you have a bank figure which is the 351.6. You have a prepaid figure which is the 19.4, and accrued figure which is 28.2. And all you're missing is the income statement figure. So what you have to do is put the items on the correct side and then balance off to find the income statement figure. All right, so take a swing. All right, yeah.
Can you just take them away and then put one on the debit side?
Well, I think it can, but what you need to do, remember, we explaining. So you want to have as much detail as necessary, right? So, yeah. Hey, Tammy, what's going on? You're back? All right, cool. Are you recovered from redemption? I have a young lady who went redemption too, one of my lesson students. Where's who? Tyrese. That's a good question, boy. Oh no, Tyrese couldn't do the switch, the Monday and Wednesday. And the thing is, he doing accounts with me on the outside. So I had to figure it out.
We hear his name all the time and we hear Sequoias.
Sequoia Moon, yeah. And Jada and Yara. Tammy saying, haven't recovered yet. Oh God, pressure the dance here. Yeah, they're going to eat our food. Eat some good food. Right, guys. So once again, the commissions received, right? Oh, sorry, hold on. So that, of course, will go as the bank figure. To be collected, that's the accrued figure at end. Receive in advance, that's the prepaid figure at end. So all you're missing is the income statement figure, which you'll get when you balance it off. And so enter the items in the account. So of course, it have space on the paper in the question to put it there. But if you prefer to put in your own book, that's perfectly fine. No online viewers yet. Okay, time next you on. No problem. Tools, go live together. Education. Hey Shivani, after how you doing? I got a through. Yeah. We could do this one. Is it 15? Do the 10. And yeah, we'll go 9. You guys got a test timetable yet? No? Alright. Trying to work out Here tomorrow for maths? All right. We're supposed to be doing some variation, like direct. You all did variations, direct variation, inverse variation. Yeah. So we're supposed to do some of that, and then. Okay. All right. Well, maybe I might tell Mishka come tomorrow then, so she can maybe work with you on and Josiah. Because the girls want to work something and you want to work something, so I'll swap between. That's all I'll do. I'll put her to work with the girls actually. That might make more sense. Because this with vectors, you're all doing where you have to solve problems in geometry. Now we have to move around a shape from one point and then like you have like midpoint something. All right. So yeah, I think I'll do that. So I'll tell Mishka to come tomorrow. All right, let's take a look. Right, so we said commissions received and paid into bank will be on the debit side of bank and therefore on the credit side of commissions. So that'll go here. So bank, 351,600. Commissions to be collected, right? So the to be collected means we haven't received them yet, which means they're outstanding or accrued. Accrued commissions, accrued revenues, and asset. Assets have debit balances when brought down. Prior to being brought down, you have to be carried down, and they're always carried on from the opposite side. So if you're brought down on the debit side, you have to be carried down from the credit side. 28,200, right? And then similarly, commissions received in advance. So prepaid revenues are liabilities. Liabilities have what kind of balance? Credit balances brought down. And before you can be brought down on the credit side, you have to be carried down from the debit side. Right, and all that's missing is the income statement figure. How do we find that? Well, we have to add up the side first, 379,800, which of course should be reflected here. But of course, to find the income statement figure, what we'll do, we'll take the 379,800 and subtract the 19,400. That'll give us the income statement figure there, right? Now, when you add up, you'll get same 37. And of course, if you want, you could bring your balances down now, right? Prepaid, balance brought down. 19,400, and then of course accrued balance brought down. Accrued. Right. So in this case we had no opening balances, but we had two closing balances, one accrued and one prepaid. So it just goes to show you that things not going to always appear the same every single time. They can have similarities, yes, but you also have to be mindful that they could be different. But what will stay the same is that the side of the account that the items go on doesn't change, right? The income statement figure for your revenue always going on the debit side. The the receipt figure or bank figure for the revenue always on the credit side here, right? And sitting for the balances at start and at end. Yo. Mm-hmm.
Why is that not on your debit side?
Because it will be on the debit side of the bank account. Is this the bank account? So in the bank account is an asset. When money is paid into the bank is going up. It's increasing. So an asset will increase with a debit. So you will debit the bank account. But every debit needs a corresponding credit. So if you're debiting bank, you have to credit where the money is coming from. And the money is coming from the commission's revenue account. So in the commission's revenue account, therefore, on the credit side, you will see the 351.6 and it will say bank. Right? Yeah. It'll take a little time for things to sink in. That's okay. No problem. But keep asking your questions. Right? Okay. All right. In class, people, any questions? Anybody? Anything? You all okay with it? Joshua, you're with us there? All right. Cool. In a meeting, Earth? Birds Earth? No? All right. Cool. All All right, Google Meet. Just give me a quick genie shot if you go with that, please, on tax. If you need me to re-explain, let me know. It's not a problem. I know my head blocking. All right, Janaya, Jada, Yuri, Devin, Darren, thank you. Right. And what about Sequoia, Moon, and Talia? Sorry. Okay. All right. Let's go. I don't know if you'll get through two more, but let's at least try to get through at least one more. If we get through two, cool. Okay. So in this one, so if you guys see any pages in your handout, you're gonna come to the. I think this one will be horizontally oriented. Okay. So in this one, we're focusing on this side here, right? So we have accrued commissions, December 31st, 2008, 1,500. Commission received by check during 2009. You have one on Jan 31st, one on June 30th, 7,000 by two, well, each time. And you have an accrued commission at end, 2,500. So what we need to see, of course, as they say here in bold, show clearly the amount to be transferred to the income statement figure. Right. So again, you're working specifically on the commissions revenue account. Right. Now, again, they give you a December 31st, 08 here, but we are dealing with the year ended December 31st, 09. So in that context, this December 31st, 2008 balance is the closing balance for 08, which will therefore become the opening balance for 09. So that's your opening balance there. And it's accrued. Accrued revenue is classified as an asset. And assets have what kind of balance at start? Debit. All right, so that goes on the debit side, brought down. Your commissions received by check, right? So they'll go on the debit side of bank. But if you're going to debit side of bank, it'll be on the credit side of the commissions account. And the accrued commission at end will be carried down from the credit side, brought down on the debit side. Right. Okay. So plug up that in your T account. I think you could draw one out. I don't think. Yeah. You know where it is? All right. Through the last little opening there, through the curtain. Second one. I'm gonna see the light on because I think it. It's 5:55, so we almost done there. Speaking of done there, I had to put some papers to print for Form 5 maths people. I'm just going to reload my printer with some paper and then we'll finish off. Allergies too. We'll take the take your style then. Hey, Chrissy, how you doing? Okay, so let's see. So accrued commission December 31st, 08 will be the same balance as the 1st January 2009. So an accrued revenue is an asset, and assets have debit balances. Let's go here. So we will say, no, I don't have a different. Okay, sorry. So 0. All right, 100. Right, now commissions received by check. So those are the payment figures. So these figures here, if we receive it by check, it means we're going to debit bank. So we have two debits, right? Now if you're debiting bank, you have to do what? To commissions. Right, because every debit needs a corresponding credit. So we already debiting bank, so we get a credit commissions. Right, so we'll do, it says 31 Jan, bank 7,000. Then it says, 30th June, bank 7,000. Nope, leave yourself right, cool. And the accrued commission at end is 25. Right, so that's now going to be carried down on the credit side. Right, and of course you can bring it down here, but before that, the more important thing to find is the income statement figure. Okay, and how do we find out? Well, we're going to total up the credit side here, 16.5, and therefore we need 15,000 here, not so? So this. And that's your income statement figure. All right, so, okay, cool. All right, so folks, right, we're going to put a pin in it there for today, but what I would invite you to do is on your, well, between now and next week, you could practice some more, right? The 09 has a commission revenue account, which is the question we kind of started with today. The 08 has 2 expenses and 2 revenues, right? Now, I'm not giving you homework, right? I think you'll have enough stuff from school and exams coming up. However, if this topic came in school for you and you want to practice it, by all means, go ahead. I have the solutions, I could send it to you, right? So again, we do not meet on Wednesday. And that's just for this week because my Form 5s have their math exam on Friday. So they asked for an extra session, right? So we will pencil in a makeup session during the course of the month, whenever you all are available, or even if I have to do different days for different people, I'll organize that, right? Worst case scenario, I just don't charge for that day, right? But we do not have class Wednesday this week. We will have next week and the week after, right? But of course, if you haven't sent me your test time table yet, please do so I know when to expect you to stop or whatever it is. All right, so online people, so same thing for you, right? If you guys feel so inclined, you can always go ahead and practice the other questions and I'll send the solution. And I got a couple of your test timetables, so I'll take a look and see how I can fit in people for as many sessions as we need to or we can before the exam. And math as well, if anybody started math, I do that as well. And add maths too, right? So I think I might try and see if anybody wants to do some of those things either in person or online. Anyhow, guys, I had to go. It's after 6. So have a good evening, have a good week. And of course, if you need my help between now and next week, please feel free to reach out. Okay, all right, Google Meet. I'll go on there. I'll see you guys next time. Bye.
Bye, Sid.
Bye. All right.